Hey everyone, it's the Patient Hodler coming at you with a very quick market update. And today we're going to look at if the crypto market is ready for a turnaround, how the altcoins will be doing, how Bitcoin will be doing, and if the market might be in risk of crashing first before the turnaround is coming. So make sure to stay tuned. So these market updates, if you enjoy them, please make sure to smash up the like button right now to let me know through these likes that you're really enjoying them and that they are helpful for you, or let me know in the comments below what you think about the development here for the market. So let's start out with Bitcoin on the daily chart, and we can see now very clearly that on the daily we are following some kind of a falling channel. So we have 1, 2, 3, 4, 5 and 6 major touch points here, so which is defining this falling channel. Likelihood of falling channels to break to the upside is higher than that they are breaking to the downside. So we would expect now from this falling channel that we come up to test the upper resistance of this again. This is just deriving from the daily chart, but you know from all my videos, if you're subscribed to this channel, that I am not a huge fan of the low time frames. I like to analyze way more in the macro, because I think that the lower the time frame is, the more unpredictable the entire price movement is, and TA is only as good as it gets. And I think a TA is way better on higher time frames than on the lower time frames, because there could be something happening, some whale dumping at this, and suddenly you have your break to the downside, right? So obviously we want to observe this movement, and there's a very good chance that we are rising to the upside, but there are a couple of warning signs in the higher time frames that I want to discuss with you. So let's go to the weekly here, and on the weekly we see basically the most scary pattern unfolding for the entire crypto community, and that is the golden M pattern, the McDonald's pattern that makes you go back to, do you want ketchup with your fries? So M pattern obviously not really the greatest, but what is good is we had lost this support already, as we can see in this weekly wick, and now the weekly really wants to close above support, and this is a good sign in itself. This is a good sign. We are at 61,386 at the point of making this video, exactly holding the support. We're holding above the support, so the next weeks will be decisive. If we are bouncing and we're forming something else that maybe looks like this, something like this W pattern, but for now we're holding it on a weekly. And also the momentum oscillators like stochastic RSI is really low. There could be a turnaround, as there always is, if we just want to see this stochastic RSI crossing here first, and then we know that the momentum could go to the upside. But at the moment that's not the case. Now let's go to the monthly and really see what's going on, and there is one of the bigger warning signs that I want to take at least into consideration, and also at least put out the warning that this retracement is not really over, and that there could be more of a retracement. I'm not going to say and stand here and predict and hope that I'm right, so that in the end I can say that I'm right, but I want to put this warning sign out for all of you guys. So looking at this close, this is a bullish close if we're closing above this level, and we're basically backtesting again the candle close of the previous all-time high. That would be in itself bullish. But if we are not just getting a pump right now in the next 11 hours, which is where this monthly candle is closing, then we are going to have the slow line of the stochastic RSI closing in the blue zone, and relatively deep in the blue zone. And there's only one time in the entire history of Bitcoin where this didn't lead to a major crash, and that one time is here. But it was not that deep in the zone. You can see this here with the bar. So if we would draw this in here at this level, you can see that we're way past that level where this happened. And that was in the 2017 bull market, where it quickly dipped into this zone and then just bounced out of it once again. In all other cases, even in bull markets, like in the last bull market, the crossing into the zone led to a major retracement, and we could be due such a retracement. So as we're seeing here right now, if we take our current bull market, we see that we are in the zone, and if we are taking the previous one and just look at the price action there, we can see that when we cross the zone into the zone here, you see this major sell-off, and that actually was a 53% correction at least. If you take the following months, it even dipped lower. So this was a 55% one, and we're down only 20%. So if we would assume that something like this could be happening, then we could say, okay, this could retrace another 30%. So we are down from the high, we're down 20% more or less until this wick. And then if we say, okay, we could experience such a thing, we could go down to 40,000, for example, in this worst case scenario. Now, there are some people would say, if that happens, the bull market is over. And I strongly disagree. I think it can happen without the bull market being over. And actually, after this major pump, I think we're due a major correction. Does that mean that this correction is guaranteed and we are now waiting on the sidelines until this happens? No, it doesn't mean that. But I'm just laying out here the probabilities. So let's look at what's going on. We are coming out of fear territory, and we're now at a fear and greed index of neutral, 47. So the market is uncertain of what's going to happen next, because if they were sure it's going to bounce, this would bounce back into greed. And we can say, okay, 200-week moving average heat map, for example, does imply that we are far away from the moving average, and that in the heat map that we are also far away from a top. So this correction can be happening, and the 200-week moving average is currently sitting at 36,000, and it's coming up. So if we would correct, that would be the lowest point that I would expect in correction, somewhere at 36,500 above. Well, because this is moving upwards, and this correction could take an entire month or two if it would happen. So the bull market is not over, even if we are dipping down to this moving average and then bouncing. We have seen that here before. In the previous bear market, we have been forming our bear market trough, we have pumped, and then we have been correcting months and months onto this moving average. And then, to be fair, this was before the halving, but then we just fizzled out sideways, and then only came the pump. So you really got to give this time, and you really have to be patient sometimes. This can take months on end where you don't see any positive signs, and the entire market sentiment will be, oh, this time's different, we're in recession, this and that crisis, maybe even a sharp correction if something in the market breaks. And that will lead the Fed and other central banks and governments to inject money into the market if something breaks, but it could lead to a short-term crash, just as we have seen it here. And we're not going to be so stupid and try to predict a black swan. Everyone who tries to predict a black swan, they're constantly like, oh, this and that is going to happen, like Japan is collapsing, and that war is escalating, and China has this and that. We don't know when these problems hit. It's like those people, they're pumping these predictions out, and if they're right, they're going to tell the story forever. It's like the broken clock thing, like broken clock is right twice a day. So this is the strategy of many people. So we don't know. Black swan is a black swan because you don't know when it hits. Anyways, if something like that hits, it doesn't have to be a black swan, can also be a normal crash that somehow has some signs at the horizon. There will be an injection of liquidity, and we see this right now. If we ignore the RSI here, it really doesn't matter, but this liquidity curve, we see here when the pandemic hit, there was massive injection of liquidity, and then in the end of April 2022, that went away, and now we're basically bottoming out and just with a slight blip curving up. So there is way more to come, because this it probably will look like this in the next couple of months and years, 2 years, when the central banks of this world are starting to significantly cut rates, and they have just started. So Brazil was the first to cut rates, then the Canada cut rates, Switzerland is cutting rates, and also the European Union is cutting rates, but they went only down a couple of basis points. So that liquidity will be injected, and then basically this will take some time, and then it will have an effect in the investment markets and so on. So this is the M2 supply. So let's look at the definition, what it is. What is M2? M2 is the US Federal Reserve's estimate of the total money supply, including all the cash people have on hand. This is the most important thing, cash people have on hand, because cash that people have on hand is what people, if they have more of it, they will put it into investments. And if they have even more of it, they will get riskier in their investments. Plus all the money deposited in checking accounts, saving accounts, and other short-term saving vehicles such as certificates of deposit, retirement account balances, and time deposits above 100K. Meaning, if this curves up, all of that, what I just read to you, is going to go up. And that will have an effect on all the markets. So that means people have that new money on hand and have more money on hand. They want to put it into investment vehicles. And the most risk-averse ones are gold and stuff like that, that is just to preserve some value. And even gold is not performing in the sense that it really preserves any purchasing power beyond inflation. But it is perceived as something that is very, very low risk. And the reason for that is that since basically building pyramids and the Roman Empire, gold has been around, so people trust in things that have been around. But then if they have enough gold and they feel safe, then they probably move on and buy some government bonds, or maybe even they jump this time because really many people will just distrust the capability of the governments to pay back the loans that you're giving them, basically. And they will go straight to things that are actually outperforming inflation, which is then S&P 500, so stocks, ETFs like MSCI World and stuff like that. They will go to this because they will feel safe there. And then they will go, after, if they have a little bit more of that cash at hand, they will maybe buy individual stocks, stuff like Tesla or Nvidia or whatever, and they will buy it at the highs, no worries about that. And then once the degeneracy is high enough and people are like, okay, so this is all not performing really well, and I have seen that Bitcoin has been going from 15,000 to 60-something thousand, but now it's back to, let's say, 50,000, so I might be allocating some money here. So the crypto space is already very far to the right here on the scale of risk perception. But Bitcoin in this cycle, or in the space, is perceived the least risky of them all. So people will put money into Bitcoin, and that is why I think that Bitcoin will go up way more. And then at some point people will be, okay, what else is there? What else is there? There's Ethereum. Okay, this has been around a long time, so that's a little bit more risky, but I could put some money in there. And then some people will be told, okay, instead of Ethereum, put it into Solana because Solana is so great and yada yada. And then you have all these altcoins like in the top 50 or top 100 that have some narrative, like for example Avalanche playing now the gaming chain, whatever, or here Phantom. Hey, this is the wallet that many people are starting with, so I know Phantom, put some money in there. And then you have this like super risky side, like all these altcoins outside of the top 200, like Ecomi, like Chappies. It's like someone has they research it, it's on their exchange, or in case of Ecomi, not on many exchanges, unfortunately. And they will see, okay, this coin, it has not pumped yet so much and it's so small, it could really pump, so let's put some house money that we can really afford to lose into that. And that's exactly the point that I want to hammer home here. At the moment, many people in this world, they have no money left over that they could afford to lose. And you know what's coming on the very right, outside of Chappies? all the new launches and the coins that are coming out on DEXs and whatnot, and still have their exchange listings, so the micro caps, these will be outside of this here in the risk spectrum. And then NFTs. So Bored Apes, the floor is already so that not every retail user can buy them, but many other things like Cryptoys and VV NFTs and all the NFTs on Blur and OpenSea and in the Solana ecosystem, all of that is very far away in the risk perception. And I think that is everything that matters. And this also reflects in the search volume for example, Bitcoin and Ethereum. And when we are in a bull market and we're really going nuts, this search volume is going to rise above 50, and then it goes to the moon, like we see it here from the previous bull market. And this is just not the case, which shows us Ethereum is down to 2 and Bitcoin is down to 15. These are the lowest search volumes, like in a bear market. This shows us that this could be a very good buying opportunity at the moment to add a little bit more to our bags in crypto. Another one that actually shows us how far away we are is the Bitcoin dominance. So as you can see here on the monthly chart, the Bitcoin dominance is actually going higher. It is losing some steam, but it's trying to press higher. And at the moment, when Bitcoin is going to turn around, probably we're bouncing here off of this resistance and going higher for Bitcoin. So that also means that at some point it's just not buying season anymore for Bitcoin. At the moment, I would say it's still buying season for Bitcoin, but at some point Bitcoin dominance will run into a big resistance and then drop massively, and that is when altcoins are going to make new crypto millionaires. And I think we are not there yet, and I think it can take another 10 months, maybe another 12 months until this is happening. But for sure, the Bitcoin dominance rise, I think, will happen throughout this year into the first quarter of the next year, and Bitcoin may be topping out somewhere to the middle of 2025, and then the big run on altcoins will happen within a couple of months. So this is just like a super macro look, super macro prediction, but I think this is how it's going to play out in the end. So this is where I think we're at the moment in this cycle. Let me know in the comments below what you think. Do you think I'm delusional? Do you think that I am probably right? What do you think timing wise? Will you add to your bags already, or will you wait it out and maybe speculate on a bigger correction? Let me know about all of this. Don't forget to smash up the likes, subscribe to the channel with notifications on, and I see you in the next live stream or video. Goodbye.